Good afternoon, everybody, and welcome to our monthly EIS portfolio update. The regular viewers will know that we alternate them each month between Life Sciences and our Technology Growth EIS. So this month, I'm delighted to have join me Ben Carter, who's our Head of Life Sciences, and our colleague Dr. Andy Round, who is the Investment Director in Life Sciences. As always, before we begin, I must do the risk warning just to let everybody know that, of course, the investments that we discussed today are classed as high risk. They're illiquid and therefore capital is at risk. And any tax benefits we discuss could be subject to change and are based on our current understanding. So guys, let's start with, can you give us an overview of how the portfolio is progressing since we last spoke about life sciences back in March and before the end of the tax year? What's really stood out for you guys? I'll start with Ben.
Thank you, Donna. Good afternoon. Good to be here. That sounds like a question that we could spend probably the next half an hour answering.
You've got 5 minutes.
Thank you very much. Thank you very much. We'll try our level best, and I'll let Andy say some stuff as well. So, I think, first and foremost, one of the things that we've got to kind of say is that we've got a very large portfolio within life science. So, circa 70 businesses that we've invested in through our seed and EIS fund. So they're all at kind of various stages. But you did ask the question, what stood out? So I'll aim to be positive because I think that's the idea behind that question. So pleasingly, we've actually had offers for potential acquisition in a couple of our businesses. So when I say a couple, that's in two, and we're progressing opportunities for acquisition in another 2 to 3 businesses. So I think a good place to start. Those deals are currently under NDA, as you'd expect. Myself and Andy and the rest of the team are kind of working through those with the management teams of the individual portfolio companies just to ensure that we get through all the processes. One of those we aim to complete hopefully within the next 2 to 3 weeks, so pretty near term. And then the other one is looking probably closer to 6 to 7 weeks. And then the 2 to 3 others are at early stages of due diligence with the particular corporate partners. So each and every one of those, in essence, will be a form of trade sale. I mean, the IPO market in the UK at the moment isn't particularly strong. You'd have to go overseas to the US. And I think in each and every one of those opportunities that we're speaking about, it's very much potential trade acquirer. So I'll start off with that. It's a difficult one for you to follow, Andy, because that's what everybody...
You're taking all the glory.
That's what everybody wants to see, but I have to say that Andy's fundamental
to all my glory, because clearly they're my exits, not yours.
Indeed, you're fundamental to all of these, Andy. So.
All of them. I think, as Ben said, if we're obviously having to be quite non-specific because of sort of NDAs and ongoing discussions with regards to sort of exits at the moment, I'll be a bit more specific on some of the companies. So again, big portfolio, hard to always pull out sort of good and bad because they're moving quite quick. But a few names people may have heard before. Arterius, which is our business that's involved in stents, so particularly medical devices for holding open arteries, just closed a new round. Historically, quite a difficult marketplace due to a large corporate having had a failed product in the market. 7 years on, new products come into market, loads of commercial interest. So it's gone from a 1 to a 0 back to a 1 in relatively short order. One of our sort of slightly higher risk sort of profile therapeutics business in the portfolio called Newpath Molecular. Awesome data over the past 6 months. So in vivo data looks really good. So this is a particular model that they use to create sort of artificial tumours. Amazing kind of cleanup rates in that. Just got a whole bunch of data yesterday back on the toxicology profile, which looks pretty spectacular as well. We've talked about a few other businesses over the years, or even over the sort of past 6 months. Things like Blossom, amazing sales progress, some proper kind of grown up growth in that one. So those just kind of 3 or 4 that I think over the past couple of days we sort of interacted with a bit of sort of real time feedback.
I think, and there's probably 2 other things just on that question, Donna, and perhaps later in the webinar we can pull some of those out. But we've had some pretty good success with the latest round of Innovate UK
Yeah.
investor partnerships. So perhaps if we speak in more detail about some companies later, myself and Andy will try and pick out some of those companies and talk you through
Did
those.
we apply for about 18 and we've ended up with about 12 or 13? So probably
Yeah,
more than
yeah.
probably got more than 50% awarded.
Oh, right.
Um,
Excellent.
yeah, so that's super positive. But and again, try to leave it a positive. But there's been kind of I think no major huge issues in the last 2 months within the life science portfolio that we've seen in any specific company. Obviously, there's road bumps in a lot
Yeah.
of in the startup environment, but kind of nothing material to report on this call, which is positive.
Okay, excellent. Ben, you just mentioned when you started talking about the lack of IPOs that are currently going on in the UK and the lack of capital, co-investment, etc. So, how's this relating into your world? Where are you syndicating? Where are you raising the additional capital from?
Yeah, I mean, just on the IPO point, I don't have the data to hand, but if anybody wants to pull that data, they'll see that there's just been a complete lack of them across sector in the UK over recent years. We continue to to liaise with investment banks on our portfolio, and have a number of relationships where we keep in contact on specific portfolio companies that are at that type of level that might look to IPO in the next 18 to 24 months. But trade sales is kind of where things are progressing at the moment. On your second part of your question around syndicating, more difficult to raise capital, I think have we raised capital from more syndicate partners in the last 12 to 18 months than we ever have in our history? Answer is absolutely yes. So that would suggest that it's easier. But I'd probably say that's just by virtue of where our portfolio is now. So we've got a much more mature portfolio. People are starting to see the progress that those portfolio companies have made over the past 12 to 18 months. They realise that we've made some pretty good early stage investment decisions. As a good partner to grow businesses. So it's been so positive, but I kind of speak to colleagues across the sector that think there is definitely less capital in that. Just early stage, it depends what you say about early stage. See opportunities, quite a lot of capital at kind of SEIS level. But as you get to that kind of £1 to £4 million investment raise, it's quite a difficult environment in the UK at the moment, and perhaps a lot of our companies are spending more time in the likes of the UAE, US, trying to raise from family offices. Is that fair, Andy, do you think?
Yeah, I mean, we've got a couple of examples in the portfolio where that exact thing has happened. So, the good old days when capital was a bit easy to raise, raising 1.5 million, you could probably do it from a single investor. We've had to syndicate pretty hard in some of our portfolio to raise that amount for maybe 3 or 4 investors. Great for the future because we've got 3 or 4 extra investors on the cap table that we wouldn't have had for that kind of additional round. But I think even raising 1.5 to 2 from early stage investment funds is still particularly difficult.
And just sticking with you, Andy, then, is that, bearing that in mind, does that change the way that you look at the investee companies and how we are going to go forward and construct a portfolio?
Oh yeah, 100%. I mean, we still have a sensible approach to portfolio management, which is a sensible spread of high risk, high return, lower risk, slightly lower return kind of businesses. So we still have that overlay. We still have an overlay of not wanting to do anything, not doing too many companies in any one specific sector. So life sciences, that's everything from service-based businesses all the way to therapeutics at the risk end. So again, we have another overlay of making sure there's a sensible spread. We have a sensible spread on top of that across what the end user is. So in most of these cases, trying not to get bogged down in doing too many companies where the only route to market is the NHS in the UK. So you try to kind of mitigate portfolio risk or the end risk by having sensible levels of spread of kind of different forms of company. So that piece still works. The slightly different thing that's come into our portfolio over the years is things that are traditionally easier for us to syndicate with other partners. It's now pretty much top of our agenda. And I speak at a few events, as does Ben. I think one of the key messages from other investors is, we are looking to do deals, but rather than doing them on our own, we'd like to do deals with Deepbridge, and equally we're very much the same. If there's something that half a dozen or even 2 or 3 investors want to do together, easier to do those rounds together rather than maybe traditionally 5 or 6 years ago where you just piled in on your own. So the environment has changed a little bit.
And just if I push you a bit harder on that question, then is there a particular thing that you think is hot then at the moment that you're finding other companies want to syndicate with you? Is there a particular sector within life sciences?
There's real sort of macro trends.
Mm.
There's definitely I mean, everybody's heard about it in the press, so we're not teaching anything anybody new. Tech-based valuations have been higher than they probably should. They've ticked down. There's still that kind of back end on the sort of AI orientated machine learning businesses. The expectation is some of those are now coming to fruition. We've got a couple of our companies in our portfolio that are now getting some commercial traction. There's interest in those areas. Anything in surgical robotics. So again, anything where you are, I hate the word democratization because it gets overused, but democratization of healthcare. So can you implement a system, be it through a more sophisticated piece of software that allows a clinician to basically do 4 or 5 times the workload with the same resource?
Yeah.
Any of those improvement areas, those are really, really quite exciting. And the nice thing is there's been a lot of technical development of those sorts of things over the last 5 or 6 years. They're now actually coming to commercial fruition. They're now actually in practice and actually being used. And we're quite fortunate with our portfolio. We've got a couple in that kind of space. We've got even a company like AI Sight that has a screening tool for diabetic retinopathy. We've got a business called Glyconics, which is a screening tool for patients with high or low glucose. We've got Atlas Endoscopy, which is a semi-autonomous sort of system for doing easier colonoscopes. So you can have a colonoscopy in your lunch hour, and rather than having a general anesthetic and you basically being out of action for 2 or 3 hours, you can probably get through a procedure in 20 minutes.
Yeah.
So anything in those sorts of spaces where there's clear healthcare economic benefits out, those are really where the market's really quite interested in.
Okay, great. And hopefully, no one's having a colonoscopy in the lunch hour today.
You never know, there might be a few.
So Ben, just coming back to you for a second. So for advisors on the call and when they're talking to their clients, how should they be positioning client expectations? We've all kind of heard the rule of thumb in the past, about exit time scales. Have these changed recently? And yeah, how should we be positioning this with clients?
There's a couple of points there. I'll probably come back to some of our comments from the previous question. I mean, first and foremost, we're still seeing a huge amount of excellent opportunities. From our perspective, Deepbridge is better known now in the space, has been for a number of years, but we're starting to work with more and more academic institutions, accelerators, etc., where they're willing to show us their more high-profile spin-outs. And I think that certainly helps. It takes a number of years for you to build that credibility that real kind of red brick universities are willing to share those with you. And Deepbridge now in the life science field has worked with about 20 UK universities, so a critical mass really. We see about 1,000 opportunities a year, so there's been no slowdown there. So I don't think that given the lack of capital we talked about, I don't think there's a lack of opportunity. Have time frames changed? I'd probably say they've shortened. I think actually just given new technology, we're in the world. I mean, AI is overused, but like Andy mentioned in the previous question, but of course that's helped speed up things in almost every single aspect of life science. In almost every subsector, you'll find kind of R&D timelines being slashed by AI. And I think the other thing to kind of say as well is we just talked about where we find our deal flow, and in the previous question, Andy mentioned what are we looking for, where are we finding it, how are we syndicating it. One of the things we spent quite a lot of time on over recent, let's say, months to a year or so is finding fantastic partners. And the reason I'm kind of I mentioned say this is because I think Andy might be sat in one of those partners warehouses at the moment.
I was going to say, for anybody who's noticed, that's not our office.
Andy's in a warehouse. So corporate partners or investment partners. So, we've got relationships now with the likes of IBM, with Time and Interconnect. And what that helps do almost day one, it helps de-risk our opportunity by having people that have, great experience providing services and support to, early stage businesses. And what that does is it just removes a lot of the mistakes that even seasoned entrepreneurs can make. Because if they surround themselves with, blue chip companies like that have got brilliant infrastructure, have all the economies of scale that those things bring to the table, then that can't hurt. And we're finding that when we make those initial investment decisions, A, are there multiple investment partners around, as Andy mentioned? B, is there some non-dilutive funding from the likes of Innovate UK? Helps make things go further. And C, can we work with a corporate partner that has access to the end user, the customers, technology that an early stage business wouldn't be able to afford? And I think all of those things we build into our criteria now. So a very long-winded way of me saying advisors shouldn't be worried about the quality of the opportunities. And actually, if anything, we can help now, given where we're at within Deepbridge's life cycle, speed up those exit opportunities. And my first statement holds true, and that's why we're starting to see more momentum on exits.
Yeah. And I suppose just going back to the other point, if you have a very diverse portfolio with some med tech in it, some devices in it, and maybe a small amount of typical sort of pharma life sciences, then you are going to get a different exit timescales, and that hopefully will then smooth out the returns for the investors, and that's ultimately the aim.
It should do, Donna, and
Yeah.
I think it's fair. Sometimes, well, actually, sometimes it's a little bit unfair to compare Deepbridge's tech growth portfolio with the LS portfolio.
Yeah.
The LS portfolio is still only 5, 6, 7 years old compared to sort of 8, 9, 10 years old. So we are now seeing the fruits of more Ben's labours than mine of the past 6 years, of some of those early stage ones now finally commercialising and finally coming to the end where there is some interest. I think what I would say to answer your question at the very top level is I actually think for advisors at the moment, I think it's the best marketplace it's been for a long time. There are some incredible opportunities out there that are undercapitalized, and valuations are much more respectable from where perhaps they had been maybe 2 or 3 years ago when there was a lot more capital around.
Yeah.
Obviously, we might get onto it in the further questions, but obviously, change the tax relief on VCT versus EIS. Hopefully, EIS is now going to become a little bit more of an exciting product this year.
Yeah, and that leads very nicely into what was going to be my next question. So, I mean, certainly from where I sit, the phone sort of post tax year end has never been hotter in terms of people who traditionally may not have been looking at EIS or CDIS are now all of a sudden examining these tax efficient opportunities as they never have before. So, bearing that in mind, how has this changed in your portfolio of construction? For example, when we're looking at seed, we're looking at EIS, and previously maybe VCT, which now isn't as attractive.
Yeah, I mean, I'll start with the EIS and then let Ben do the EIS. But I mean, SCIS as a product is incredible. I mean, I think the relief that you can actually sort of leverage on that makes it almost a no-brainer if you're interested in investing in some pretty cool early stage companies. We've got some data now, some real concrete data, that the conversion rate of our SCIS products, again, Ben's hard work of 6 years ago, it's supposed to be the last 3. A significant number of those have converted into EIS, and a significant number of those have gone on and raised much more substantial capital outside of us. So sometimes for investors, and I think for advisors, the immediate kind of response is, what does success look like? Well, success is exit. I think success for some of the LS sort of our life science companies is the ability for those companies to continue to go on and raise capital from our peers who maybe have bigger funds and are more sophisticated than we are or less generalist, with ultimately coming an exit. But on SCIS in particular, because it's a really smart product and it's wonderfully compatible with some other UK-based products. So things like some of the sort of seed funds, some of the things that the British Business Bank create. You can create quite quickly some nice syndicates of not just 250k, but £1 million kind of rounds, of which we're taking up 25% and doing that support piece with a view that 12, 18 months down the line, we've created our own pipeline for EIS. And it's a little bit like, if you invest in it, you kind of work out where all the skeletons are before you get into our EIS. So it's a really good feeder product for our EIS product. I better let you have a say, Ben, before I keep talking.
I was
No,
going to
I
say,
think
am I
that's
right in saying that is it about 70% of our EIS has had prior seed funding?
Yeah,
Yeah.
yeah, 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 and it'll continue. And I think we structured it in such a way now that we try not to do any of our new SEIS ones on our own. I think of the
Mm.
last cohort of 5 or 6, there was only one. And it was only one that Ben and I have been looking at for sort of 18, sort of 20 months and wanted to do.
Mm.
We've got a list of syndication partners for that one that we want to do. I say without labouring it, these public-private funds, the fact that Innovate have kind of come into the market with the Innovate Partnership Award is kind of stretching that kind of capital mix. And really what we're doing with our SEIS product is just leveraging it wherever we can against everybody else's money to make sure that, we end up with kind of £1 million rounds where we can do some proper damage as a business
Yeah.
over a period of 12 to 18 months, as opposed to being a little bit kind of capital restricted when the government decides to change the relief on SEIS or even change the minimum the companies can take. We'll see. I think there are discussions about product fit and whether there are some changes that are there. The other thing to say as well is there's quite a lot of, I suppose, more mature technology-based healthcare assets out there than I think there ever has been. I mean, Ben mentioned universities. I think universities and research institutes have become much smarter at kind of incubating things for 2 or 3 years with £2 or £3 million of grant money in a much more commercial environment than traditionally they used to. So we did 2 or 3 in the sort of 25 cohort. So companies like Plasma Fresh, which we might talk about a little bit more, or even OcuWell, that, to be honest, over the past 12 months, their actual technology piece was so far on, they're now in grown-up discussions and grown-up demonstrations with real paying customers. So we haven't had that kind of 2, 3 year technical development. We kind of invested in it. We're almost finished.
Yeah.
That's
I
a
think
big,
quite often people do think that with seed, don't they? They think, oh, this is very early stage, it's vapor stage,
yeah,
they've just come up with a concept, whereas clearly, there's
yeah,
years and years of research before they
yeah.
even spin out.
Yeah, and we will do the, I don't want to call them sort of back crazy ones, but we will do super early stage ones just to kind of balance that out because it's that horrible mess of things that are more mature where there's potentially less technical risk. There may not be the most outstanding kind of marketplaces as opposed to something it's that evolution versus revolution.
Yes.
So we
Yeah.
do try to find a few that are just absolutely first in class in that kind of
Yeah.
marketplace, just to kind of balance it out a little bit. But we don't, for anybody on the call, we don't do 10 of those.
Yeah, that's
Yes.
yeah,
Yes.
yes. Ben, anything to add there before we start looking at some of the companies in more depth?
No, conscious of time, Donna. So I think yourself and Roundy have put that point to bed and made some very very done a very good job. I can't get my
That's
words
kind.
out. I was going to try to be clever there with my words, but I couldn't.
Okay, so right, let's get into the companies then. So first of all, I want to talk about Entropix. Who's closer to Entropix between the two of you? So
I
Andy.
might throw you under the bus and let you do this one, Ben. But
Yeah, yeah.
I better not. It's a bit
Give
it's a
me
bit
a
me.
condensed progress
I
update
will.
of
I'll
what's
give you a
happening with.
condensed one.
Yeah.
So Entropix, for all those on the call, was a business we invested in a number of years ago now, from SEIS into EIS.
Hmm.
Um, had a number of kind of technical pivots. So the original business was creating enzymes for various different industries. So chemistry that would degrade, say, plastics into individual components. Had pretty good commercial progress in that kind of area. Had a couple of pivots. So they found a different way, and again, without being too technical, isolating various different components that you might then want to put on a diagnostic platform. So their ability to isolate kind of DNA, protect it and preserve it, and stick it on a diagnostic platform that maybe could be used to tell you whether you've got various different cancers. So their kind of pivot has been to almost be an enabler for diagnostic businesses to make their technology work a lot better. And actually, it's been quite spectacular over the past year. I mean, again, there is a certain amount of confidentiality in terms of the companies they're working with, but take it from us, they're working with some of the largest biotechs and some of the largest diagnostic companies in the world. With one or two of them, we've had proper kind of technical diligence that's ran over. One in particular has been running now for more than a year, and we've come out the other end, and we're kind of in the process of kind of feeling out what a commercial deal would look like, whether that's potentially a complete acquisition, potentially a license, potentially a license that leads to a buyout. Obviously, we're trying not to rush. We're kind of hurrying slowly because there's five or six of the horses that we're running at the same time.
Yeah.
Management have got plenty of experience in kind of this sort of space of working out what a good deal would look like, and we're doing our best to support them. It's a bit, till someone signs paperwork, we're as skeptic as we always are, but again, it's really transitioned from something that could be of interest to something that is definitely of interest.
Yeah. Yeah, good, strong progress, and it sounds like they've
Yep.
got some good partner validation as well.
Yep.
Ben, FerryX, I think you're a bit closer to that one, aren't you? Can you give me your perspectives on how it's commercializing?
Absolutely not closer than missed around on FerryX. But if you want me to speak, I can maybe do something like Microplate. Yes, I think we mentioned, and then Andy can jump in and do.
Yeah, do that way.
Okay, do it that way. I'm
So
just conscious we've not heard from you for a while, Ben.
that's fine. And
Oh,
I was feeling completely left out. So I think at the start, one of the first questions we talked about non-dilutive funding. We talked about Innovate UK and how we've been successful with a number of awards in the recent investor partnership, and Microplate is one of those, and was actually successful. It won about £500,000 as a part of this recent grant funding, which makes you smile when you talk about Microplate, because this is a business that over the past 2 to 3 years has probably received somewhere in the region of £4 or £5 million in grant funding across multiple awards. It was also voted, I think, Barclays Company of the Year. So it's been a real high-profile investment for us over recent years, and this is again one that we backed with the very first check coming out of University of Strathclyde. So came out of our SEIS fund. The business itself develops a rapid near-patient diagnostic platform for infectious diseases. It's got proprietary software proprietary technology, as you'd expect with a business like this, and is protected by multiple patents in multiple jurisdictions. But in essence, what's been really pleasing, more than even some of that kind of non-dilutive funding, is some of the data that the trials has kind of pulled through. So we're now looking at a diagnostic accuracy of greater than 95%. So there's very, very significant, strong early validation there within pilot studies. What's that led to? It's led to 4 investors joining Deepbridge on this journey. So we've actually got a US investor in this business now. We've had interest from China and from a US family office around more significant type Series A investments. We have an open term sheet with Microplate at the moment with a couple of £100,000 left to invest alongside a Scottish enterprise. Whilst in the background, they've recruited a new chairperson, strengthened the board, and all the materials ready to go out to raise that kind of Series A investment now that they feel that the product's been materially de-risked. So kind of watch this space on Microplate. It's been one of the more straight line investments in our portfolio, which you don't always expect, but it's nice to see sometimes.
Yeah, really nice to see. We watch this space. Look forward to hearing more.
Indeed.
Andy, then, do you want to give us your update on FerryX then, please?
Yeah, I will. So FerryX, for all of those who can't remember, is a business that basically has isolated a specific bacteria that's used in a probiotic formulation. So this particular bacteria, super good at cheering up your gut. It survives in high iron concentration or high iron environments. The beauty of it is that if you're having a sort of a flare up, an unpleasant kind of bowel flare up, that tends to be in an environment that has high iron concentrations. So this little beastie survives in those and calms your gut down very nicely. Most products on the market, so you're thinking about things like Simprove or any of those sorts of products, their products do not survive in those environments. They just don't work. The beauty of the FerryX product is it clearly works. We have sort of moved into the world of FMCG and kind of over the counter and consumer. And we've done it from a very clear kind of technical background. So this is technically proven particular product that does work. So we're trying to get to move away from that kind of snake oil kind of product. So, real consumer claims with good clinical backup.
Andy,
Um,
what does FMCG mean?
Sorry, it's basically shorthand for consumer products. So it's
Ah,
it's the
right.
whole consumer based thing. So anything like medicines that you could buy from a Boots or various things
Ah, okay.
it fits in that environment. The beauty of FerryX, like I say, is unlike some of the more sort of snake oil or quack based products, which have lovely consumer brand, but just don't work. This is the opposite end. So we're slowly but surely kind of penetrating that market. It's a reasonable size market in the UK. It's huge globally. We're chipping away at it with, relatively modest marketing budget, which actually has real clear impact. The business has been revenue generating now for getting on for sort of 12, 18 months. There are a range of new products coming out that have been designed. So we've got one in women's health. We've got one to improve sort of mental acuity, tie down a lot of the manufacturing side. So we're at that lovely kind of phase where a lot of the foundation's been done. It is out raising some capital. We do
Yeah.
need to raise something much more substantial. We've got some interest from investors who like that kind of consumer space. It is ready to scale. We've hired a couple of industrial experts that are ready to go. We just need a bit more capital in it, and it'll be off.
Excellent. And if people are interested, their consumer product is Ferrocalm, yeah?
Ferricon, yeah, for anybody who's got a problem, have a go. Equally, if
Yes.
you drop me an email, if anybody like to or yourself don't want to pass them on, I'll happily introduce them to Jenny, who's the boss.
Yeah.
There's
I,
always
I know I
always
have an advisor who uses their products and can
okay.
testify to them, so he thinks they're great. Mm.
We have a few internal people who use it.
Yes.
I think it's
Yeah.
good as well.
And I'll stick with you then, Andy, then for ASMT. Can I get an update there as well?
Yeah. So on ASMT, I think we had a little bit of question as well, which is kind of what does it do? So
Mm.
people kind of come back and ask. So I don't this one of the title or the name of the company kind of really explains what it is. But what it is it's in this kind of interesting space where they're trying to automate a piece at a time what's called a tracheostomy. So basically, an unpleasant situation where a surgeon may have to take a scalpel to your windpipe, open it up, and find a way of basically allowing you to breathe. They then put various different sort of medical devices in to kind of keep you clean and continue your ability to kind of breathe through it. It's quite a difficult sort of surgical challenge. And really, we talked about it before, it's in that kind of space at the moment where there are some of these standard procedures which are quite complicated and take quite a while to train sort of surgeons or train clinicians, where the market's looking to kind of standardize them a little bit more, but also just make them easier. So again, it's a resource issue rather than finding a senior clinician you've got to come down to basically do this. Can you bring the training level down a little bit and bring the safety piece down a little bit by having some sort of automation? So what these guys have got is a next generation of tube, which again seems quite simple, slightly more flexible, easier to insert than standard. They've got a next generation piece where you can sort of scan this particular part of the neck, look for the kind of right point between various different muscle groups in the neck as to where you would actually do the penetration. And then a further product further on where actually almost you press the button and it would automate it, it would do it itself. Um, pretty good commercial feedback, really good clinical feedback. We're now working with a couple of the sort of the great and the good from a key opinion leader point of view. Lots of interest around what we're trying to do. It's also one of these strange ones that actually came from a European Space Agency product, which was when we obviously trying to send astronauts to the moon and then further on to Mars. What are the surgical procedures that us three on this call could basically be relatively quickly trained in, but you could semi-automate because you can't send several doctors or several clinicians with every mission. So
Mm.
there's this whole sort of extra industry kind of evolving on being able to do things in kind of rural or difficult to get to environments, where if you can automate part of it, it just takes that kind of safety edge off and takes some of the training off. So it's in a lovely space. They managed to raise quite a bit of capital from slightly different sources. So they've been awarded some money from the Tata Growth Fund because they're based in South Wales, where Tata's leaving one of the sort of steel industries. Really good support from the Welsh government. Having sensible conversations with a couple of funds down there, we've continued to fund it, and it's won an Innovate Partnership Award. So I think we talked about companies' difficulty in raising capital. I think for every pound we're putting into this one at the moment, they've probably raised in the region or got access to maybe £4 or £5 of essentially public capital to move it on.
Excellent. So in terms of what success would look like in sort of 12 to 24 months, is it going to be raising more capital, or is it going to be certain achievement of certain milestones in product development?
Yeah, next few milestones are getting it to a point where we can get ethics approval to start and use the sort of the early stage tech in this kind of pipeline of products on humans. Maybe about 18, 20 months or so, we'll probably be able to start and have a go at real patients.
Excellent. Ben, anything you want to chip in there?
On ASMT, not particularly. I think it's one that I think I did the initial DD back on in the day, and Andy's taken over the day-to-day management of that business, sits on the board of that business, and is adding a significantly more value than I did by the looks of it. Most of those co-investors have come on since Andy's been around, so perhaps they just don't like me.
Oh, excellent. Well, not that you're competitive or anything.
No,
Um,
we're all one big happy team.
Yes, of course, of course. Yeah, I just want to look at a newer company into the portfolio. One I don't think we've spoke about on a webinar before, Plasma Fresh. So we've had some recent updates around them, but what's generating the most interest about this company? Andy, do you
Are
want
you
to take that?
are you going to blag it, Ben, or do I have to fill this one as well,
No,
mate?
no, no. I was going to do ASMT, but you
Oh,
did that. You did that incredibly well. So I'm allowed to do Plasma Chefs because you know a lot more about this business.
that's kind. We'll make it brief so we got time for questions. Plasma Fresh, good example of local to us, Liverpool University spin out. Quite mature when we did it, syndicated pretty hard. So we syndicated with the university itself, who actually from its seed fund found a 250, 300 grand check and continue to support it. Similar amount of money out of Live Labs, which are local authority based fund. And what they've developed a nice bit of tech in what's called cold plasma. So the use of plasma in a sterilization of kind of cleaning environment. Original technology or original concept was basically to clean conveyor belts after your sandwich manufacturer has made hundreds and hundreds of sandwiches. It worked okay. But what they have found, and again, the engineering team is quite spectacular in this, and we've only been in probably 16, 17 months, is their ability to go out to different industries at different kind of verticals and create two or three new variants of basically the core technology. And where they've had success or real success so far include getting proper paid for clients that are parting with hundreds of thousands of pounds for products. Is one in the sort of security areas and forensic science kind of areas where they could take things like a laptop or a mobile phone or a piece of electronics and clean all the DNA off. They've had real interest in the agricultural space where you may be growing a very high value crop that potentially is used in pharmaceuticals, where you want to have a technique that cleans the crop but doesn't damage them. High value products like vanilla, so vanilla pods. Vanilla pods are always, or vanilla product always contains various different sort of bacteria and fungi on the surface. And what you don't want to do is damage the flavor profile, but equally you want it to be clean. So we've been really impressed with the strength of the team actually. Sometimes a little bit of like getting them to kind of focus, but they're in that kind of phase at the moment where it works in lots of different industries, and we're supporting them to run those not clinical trials, but those pilot trials to really kind of work out what the sort of final commercial products really look like. So it's really exciting. I mean, every time we go to a board meeting, they've got another new client that's parted with 50 to 100 grand, and they're off doing something new and exciting. But it's a really interesting space at the moment, and slightly different to the rest of the portfolio.
Yeah, I was going to say that's a little bit of something different to be looking at. So we are in the sort of final minutes before we wrap up. I've just checked, and we don't seem to have had any questions from the audience.
It's
So
sad.
I know. You must have covered everything perfectly. But just in terms of wrapping up, then I'll put a final question together. We've talked quite a lot about some of the highlights, and of course, advisors and clients on the call are ultimately interested in their exits, which we hope to bring to them soon. But is there anything else that either of you would highlight that that advisors, clients should be looking out for over the next 6 to 12 months? Ben?
Yeah, I think the key thing within our portfolio, I mean, we always try and answer questions fairly and honestly, on a call like this, and try and temper the good news with the bad news. I think, as I said, since our last call, there hasn't been any significantly bad news within our life science portfolio, which is super. That in itself is a positive thing. But of course, with a portfolio of 70 businesses, there is difficulties in a number of those. Whether that's they haven't hit the appropriate milestones or regulatory hurdles within the time frame. Their cash reserves are running low. They're finding it difficult to raise capital. And also with at Deepbridge, one of the things that we have to look at is that are there other investors that are willing and able to participate with us? We talked about syndicating a lot. So at some stage, you do your level best to ensure that the businesses are given every opportunity to succeed. But a lot of the businesses, certainly some of the ones that are still trying to materially de-risk themselves, raising that next round of investment from a third party outside of Deepbridge is going to be a key milestone within their, the life or death of that business. So that's something to kind of bear in mind, because on a portfolio approach, there are going to be a number of those that ultimately won't succeed. But I think that I want to leave positively, and I think this is probably the first call in recent times where we've talked about a number of exits that are literally around the corner. And whilst I won't be drawn as to how many I think we'll do in this calendar year, there will be a number, and that's positive.
Okay. Thank you, Ben. So yeah, we are at time. I think it's been a great call. Thank you both for your contributions. For anybody out there that was going to ask a question and hasn't done, then please get in touch with your local Deepbridge representative, or just email into the office at advisors@deepbridge.com, and we'll be able to help you out with that. Also, don't forget to join us regularly for the portfolio updates each month, and in between our educational webinars. For example, tomorrow we have the third in our series of IHT webinars, so please join that at 9:30 if you've not registered already. Thank you all for your time, and hope to speak to you all soon. Thank you.